You guys are hilarious. What's up? Hey, so question, does my audio work? Can you hear me? Because I don't know if this is working. I need to see in chat. Does it work? Audio check. Audio check. Yes, no, yes, no. So I had a technical difficulty today. Somebody give me I see a yes. Yes, yes. Okay. I got one yes. Holy crap. All right. All right. I got a yes. I got a couple yeses. Audio's working. Cool, cool, cool. Who dis? Who dis? Yes. It's that lag. It's the lag. So I had some technical difficulties this morning. Because I have another obviously different setup, right? But I had another computer at the other office, and I guess Windows 10 is out of service, out of commission or whatever. I gotta fix this glare. So this thing has got a glare on it. It's cool. It's like this is the inverse. So the other one is black on just black. This is just the same thing except colors inverted. Hey, Joey here. What's up? Did we call the bottom? You know, I don't know. I don't know. Finally, soundproof. You know, it was always soundproof. You guys just couldn't tell because of the lighting scheme. Did we call the bottom? I don't know if we called the bottom. Oh, you know, there's supposed to be some kind of light there. It's empty. I haven't filled it, so sorry. there's a light. I don't know if we called the bottom, guys, but I did know that we were done going down for right now. I don't know if we called the bottom. I can't say that. I cannot say that. So today, if you're new to the channel, by the way, welcome. First of all, every Monday, as long as the market's open, I do this kind of stream. Monday, around this time, around the lunch hour, usually it's kind of like a pause, break, breathe a little bit. Monday mornings are like knee-jerk reactions for the market as a whole. So I don't want to get anybody overly excited. This could be the top. I'm just letting you know now. We knew I felt like we were going to bounce. I didn't want to get anybody like all wound up and sell the lows. I didn't see that happening. But we're not out of the woods yet. We are definitely not out of the woods yet. So I don't want to get wrapped up in, being overly exuberant either. So we got the fridge. No, the fridge is not empty. There's multiple fridges around. So we just have to, I just got a little lazy, man. But yeah, so we went from the black room to the white room because today's a good day, right? That's basically it. Today's a good day. So the darkness is gone. The darkness is gone. Yeah, I think this is right. We have a few levels to take out first. This is important. And the cool thing is that the market coming in out of last week, the market was very much on edge. And if you were on any of a Mitch streams, so if you're not subscribed to a Mitch channel, number one, I mean, I don't even have my YouTube up, but like I always link a Mitch channel. But if somebody can drop a Mitch channel in the chat, I'll pull it up. But every Tuesday and sometimes a guest appearance here and there, I'll come in and we'll do another stream over there, and we'll talk about the market and maybe where we're going. The deal is that the market was very much offsides. It looked like a very bearish setup. Technically, it was a very bearish setup. It still remains to be a very bearish setup. But there were a lot of things, and sometimes when it looks like that and it doesn't go that way, I've always said there's this weird thing about technical analysis. When everybody's on one side of the train and everybody's thinking that something's going to happen, well, the most bullish setups are technically failed bearish setups. That's a thing. This is why I'm not a pattern trader, right? And why I still have this comment highlighted here. We have levels to take out first. I know the patterns, I know the setups, but they're not reasons to act. We technical analysis is very reactionary, very much if this, then that. But if this doesn't happen, then there's always another that could happen. And what everybody was thinking so far did not happen yet. So it's still a yet. um, and it's TBD. But a lot of people were short, have been short, might still be short. If we continue to go higher, they're gonna be pretty red, and we'll have to see. That said, there's a lot of things that happen between now and let's say, I mean, it's a short week, guys. We have, I mean, can you believe that Thanksgiving is happening like this week? I mean, it's insane. Okay, the whole cruise here, and don't forget Miss Cleo. So I do have, so Miss Cleo does 2 readings. Our friend who's our how do we say? We have like she does tarot. Miss Cleo does tarot readings. It's a joke, a running joke, if you will, but surprisingly accurate sometimes. She does crypto also, and this weekend when it comes to Ethereum, crypto in general. Um, what I will say is that everybody's going to get around the Thanksgiving table. You're all going to see, not all, you might, a lot of people, sorry, a lot of people are going to see a lot of friends and a lot of family this week. And historically, on Thanksgiving, this is when crypto really wakes up. Um, and there you go. It's TVD. Right? It's TBD. This is when crypto shows its true colors. This is when crypto shows its true colors. And it's going to be up to you guys and everybody else, because when everyone is sitting at that Thanksgiving table this year and crypto gets brought up once again, like it always does, the question is is the conversation going to be like just massive disappointment? We're all going to sell it all and run? Or is it going to be, this is just an insanely crazy dip? It makes no sense. And we're all going to buy it all at once. And that's what happens with crypto every year at Thanksgiving, at the dinner table all at once. And it's kind of a thinly traded market. Everybody's watching the Super Bowl Thanksgiving, or not Super Bowl, Thanksgiving Day football game, and Coinbase is going to have all of their commercials running. Maybe not. Maybe Robinhood's probably going to have Thanksgiving Day football commercials. I don't know, but things are going to change on this day. I'm already getting text. Here you go. But this is how it works every year. It doesn't always head into it like this, but what I'm saying is that the tone of the dinner table that day, you guys are all going to know this is when crypto is going to show its true colors. And if the tone is it's just an epic disappointment, if it's I just don't believe in it anymore, or if it's like, hey, this is a stupid situation, this is a generational dip buy, whatever that tone happens to be, just listen and listen to what your friends and family are going to say. You don't need to be the one that's making, like, setting the tone. I'm not saying that, but pay attention, because this moment that you're all going to see and take note of is probably going to determine the next course of action for the entire crypto verse. I call it the crypto verse, but it's going to determine the next move for the space in general. It's not today, it's not tomorrow, it wasn't last week, it wasn't even the last few months. I'm just telling you, it's this, oddly enough, dinner on Thursday night in the United States. It's just wild how it works that way. So, do you see this? My mom got me this, by the way. This is a vintage 1980. What year was I born? Do you guys know? 80. Oh my goodness, you can't see it. 84. That's old. Vintage edition. Kind of cool. Eh. Mm. BTFD and eat your turkey. Thank you for your attention to this matter. Yeah, I mean, that's how it goes. And by the way, so if you're on YouTube or you're watching this later on, at Paper Gains INC is the Twitter. I've been posting stuff like this, whatever I see in the market as I see it live. Look, last weekend, I'm watching these levels like a hawk right now. I don't trade a lot on the weekends, but how we set up on in the cryptoverse right now is kind of like, especially on the weekends, this thing is like, I don't actively trade this stuff anymore. I used to, but I'll tell you what, if I don't, because crypto moves like crazy after hours, and this is so like for team no sleep, if you will. And man, with the boy and family and everything, I'm just like, I can't live like this anymore. I can't do the 24-hour 365 markets anymore. Old lives matter, dude. Uh spending time with my cat. I'll pay attention. Yeah, I mean, but it's from that dinner. Where do we go from there? I think that's when it's going to show us true colors. Any substance to the Mercury retrograde malarkey, then. I mean, I don't know. I don't think so. Uh, but I have always said it is the eating season. And it's not because we're eating food, it's because like we all get together and socialize, and it's the power of people coming together. If the market is nothing but a collective mirror, like it's a mirror image of the collective human behavior. That's what it is. And when we all get together, we kind of spread our thoughts and things like that, and it is reflected in the markets. Um AKA paper doesn't party anymore. Listen, dude, I will tell you that I have partied probably 10 times more than most people from like just before I was 20 years old. I probably partied more than 10 lives. So I think I'm good. I think I'm good. But I'm ready to roll if you guys are ready to roll. So this is what I got for this week. All right. So, I mean, the headline of the day was good old Benioff posting in his chat GPT post, by the way. Did anybody catch that? I think it was hilarious. But yeah, chat GPT post tweets about Gemini being the best. I think that was hilarious. I've actually tried this Gemini, and I'm of what I have tried also pretty impressed as well. Although I will say, like, I use Grok, I use GPT, and I only have a free version of Gemini. Um, I haven't really gotten. Oh, Evan's texting. Uh, yeah, Evan's gonna miss, but it's all good. But I haven't used a paid version. I probably will pay for Gemini just to really get into it, but it's just too much to juggle all of these. But apparently, it's the TPUs, right? So is the Google tensor processing unit really leaps and bounds better than uh, the GPU from NVIDIA? And I think that's kind of speculation. I haven't looked at the chart. And is it a reason to sell NVIDIA and buy Google? Well, that's kind of what we're seeing. It's look, if you're buying Google here right now, I will say like there's nothing really bearish about all-time highs. I've said that for many years. Um, and there's nothing wrong. There's nothing broken with the Google chart, aside from the fact that it's extremely stretched and it's gone very far, in a very short period of time. But that said, there's no signs of it slowing down yet either, which is like mind-boggling to me. Is it stretched? Absolutely. Is it a little chasey? Probably, but it hasn't broken yet, so there's no reason to think that it's going to break tomorrow. Um, so, uh, Google has always been the best. Google is good right now. I mean, I'm guilty of like saying for many years Google was just down in the dumps and gone nowhere, and then all of a sudden, poof, out of seemingly nowhere, it's like magically making this huge run. But that's kind of how stocks go, right? And that's how the market works. It makes Google was on a resting period in a multi-year go nowhere resting period for a very long time, and it's Google's time right now. And I think it's it's as simple as that. It's Google's time, and it's been in hibernation mode for a very long time. And it's up to you guys to decide, well, is it towards the end of the run or not? And is this the best spot to jump in or not? I maybe you probably get it, even if it comes back to sub 300. I don't think anybody's really going to worry about it. It probably does, but it's not really going to be a big deal. Does Nvidia deserve to lose a $5 trillion market cap? That I think is a different question. But let's get on with the show. So what we're going to do right now is we're going to go through, hey, look, what's happened this week so far, albeit it's only Monday. What happened over the weekend? What are we going to look forward to the rest of the few days that we have in the market? I'll talk to you guys about what you can kind of expect. I'm going to look at a couple tickers. We're mostly going to look at the market. And if you have a couple tickers, we'll take a look at that as well. And I believe tomorrow, if you're not on a Mitch show, I think we'll also follow up tomorrow with a Technical Tuesday edition on a Mitt's YouTube channel as well. Am I a prophecy? I don't know. We'll see. But the bears are just sleeping right now, and it is a low liquidity week, and we will talk about that literally right now. So let's go ahead and get on with it. So first things first. I mean, this is clearly Google launched Gemini 3. Rave reviews, essentially. Benioff's X endorsement, I think, catches a lot of eyes. Laughable to an extent, but Gemini 3 really is doing really well and getting a lot of really good reviews. Tesla, if you didn't know, I think Tesla's doing pretty good too. 415 was the level. I didn't think it was going to get this high this fast. I don't know that Tesla actually holds. I'm pulling it up on my phone. But there was some good news on Tesla. No, still it's at 420, another magical level. So just barely breaching 415. 415 is the magic number. I think this is about exactly what I was thinking. Probably comes back to 415. If it can kind of like hover around this area, that's pretty much exactly what I expected. This third bullet here is a big one. So if you guys remember last week, does anybody remember all the chatter about the yen going on across X? And this yen thing is a big deal. It still is a big deal. Potential yen carry unwind 2.0. And it's mostly about the new prime minister. I think she kind of like surprised the market with a new policy seemingly out of nowhere that got everybody on edge, a little bit of jitters. And last week I'd mentioned on another show, which again, I think this was a myth, but when it was at peak fears, it was very much like, hey, look, things can get bad if this goes awry, but it's very possible that Japan actually steps in with some kind of stimulus, which they typically do if things get really bad, or they really could, and actually stop bad things from happening. And this is a little piece of that. But this policy shift in Japan is still going to be a big deal. This is a band-aid. This Japan's $135 billion stimulus, that yen unwind potential shift thing is still a big deal. Yen slumping for the JPY, Japanese yen, to 156.70. So if you ever watch this, if you see headlines of the yen getting over 160 is the key level for that one. They need it to stay under 160. If it's over 160, that's a big deal actually for our markets. And probably if it does get close to that, that's about the same time when they would actually step in and start making some actual like aggressive adjustments to the point. This is not it, but to the point where they could actually sell dollars to buy yen and and change things a bit. But this is actually a stimulus. They did this with a policy approval to change the rates. And mostly it affected the auto sector. So, and a little bit of their AI sector. Trump tweeted, yeah, so we'll talk about this. This is a big one. So in here, US trade. So this is exactly that, right? So US trade framework was the last call he had with Xi was in October, end of October. They had another call today. And what they did was they extended essentially their current framework through November, last I saw. And the only thing that really came of it, so this whole US China trade framework is what really started kind of the bounce today. In addition with, hey, look, some of this yen fear off the table. Look, think about this. Gemini's still doing good. Google's moving, right? Apple's holding. This yen unwind thing is maybe not as bad as we thought right now, right? US China trade framework is still going good. We have decent hopes about that happening. The one thing that President Xi said was that, hey, look, maybe what did he say? Something about Taiwan. Taiwan coming back to China is still like a goal for the People's Republic of China, but it wasn't. But it was like a long-term thing, and up to the people. And I think that's like negotiation tactics. But net, as far as I saw, nothing really changed, and they extended the existing framework through the end of the year, the end of this year. So they have another meeting scheduled December 31st, which again, all right, so nothing bad is going to happen right now. The only thing that did happen was, like, look, oil's kind of falling again on renewed hopes of a Russian truce, which, by the way, this is all kind of good news, right? In the meantime, the stuff that we're coming off of is like, look, last week, peak bad news, yen issues, right? U.S. China, stuff is kind of like not in perspective anymore. We had FOMC minutes showing, hey, look, we had a divided Fed. We had non-farm payrolls coming out saying that, look, our job situation, by the way, bad news from a job perspective is good news for the rate cut situation this month, right? And what we got for the September NFP, well, was better than expected. So in parentheses here, these are consensus numbers, meaning what was priced into the market before we got that NFP release. So what the market was expecting, meaning what was priced into the market at that point in time, was that we were going to have 50,000 new jobs taken for the month of September, which is what we just got last week, same day as NVIDIA earnings. What we actually got was 119,000 jobs, over double what the market was pricing in, which means that, all of a sudden, the labor market's probably a little bit better than where we thought we were, which when you extrapolate that out, it's like, well, it's less of a reason for the Fed to decrease the rates, which is what the market really wants. Government employment. So again, we actually had more jobs taken than consensus across the board, and then employment rate somehow I show an expectation of 4.3. This is the oddball number. Unemployment ticked up slightly while more jobs were taken at the same time. So that's where we are. All that said, can I order a Lambo? No, I don't think you can. It is a low volume week. I think that anything that happens this week can be very exacerbated on the charts. So if we rally, and there's one thing, when we get into some earnings stuff, I'll show you what I mean. If we rally this week, if an event happens, let's say a tweet happens, I think that it can be a very exaggerated move. Well, I don't think there's a extremely high probability of it being a very exaggerated move, simply due to the fact that there's not a lot of market participants this week. And again, if there's all of a sudden a reason to rally, well, there's not a lot of sellers to sell against that right away. Or if there's a reason to sell off all of a sudden from a sentiment perspective, policy change, things like that, we're going to be very news and sentiment driven this week, for the next couple weeks, because there's not going to be a ton of buyers unless you guys are logging into your brokerages right then and there, which, sometimes you get the really good buys. Like if the Grinch shows up for whatever reason, which, it's very rare, but when the Grinch shows up, I mean, it's proven to be some of the better buys that you can possibly get. I mean, circa 2018 Christmas Eve, probably the best buy of a very long time outside of COVID. Those are honestly some of the most exaggerated purchases out there because the market extends everything and there's not a lot of participants on either side. But so hard, all that to say is, this is what I said last Monday. If we're looking at things and we look at the indices overall, this late November dip in IWM, this is the kind of small cap thing. If growth comes back, and as much as I really want to root for value, and every year I do want to root for value. I can look at these Toyota. Look, Toyota's another one. This is a perfect example. I would love to root for Toyota as an example. I would not like to root for Ford. You could look at GM. GM chart's actually not that bad, but like I would love to root for Toyota. But it's kind of been hovering around the same price for forever. My example is more like Pfizer. I would really love to root for Pfizer, or maybe even like really root for Nike. But I can't put a ton of money behind these things. I can root for them. I can put a little money behind them. But at the end of the day, like every year this happens to me, and this is my story where, I really want to really root for these like hot, like value plays. And what happens is that they get a little love right about now. And, the market balances out. And at a certain point, usually at somewhere around December, we get this bounce here. This is the Russell 2000, Russell 1000. Really, this is the Russell 1000 growth is what this is. They start to pick up again. And there's this switch that gets flipped in the market. And the market they love growth stocks because the truth is that there's no better returns out there. You can't get the returns in the growth stocks that you can in the value names. Like you cannot get a Palantir or Robinhood like return out of Pfizer, Merck, or Nike, or even J&J, who is like all-time highs right now. You just can't. They're good to offset a lot of portfolios, and they're good to manage like one-sided risks. And I think it's very much about where you are in your life journey, and like whether or not you're in the wealth creation or wealth preservation stage of life. They're two very different things. If you have a lot of years left and you're just driving towards wealth creation, look, you can handle these 50% drawdowns, and over the years it's going to work out. But if you're retired and you have no W-2 income anymore, and you're not going to be depositing any new money, and you don't have any residual income, like, no, you're in very much wealth preservation, and you need to be diversified. So you need these. So they're two totally different mindsets. I just need everybody to understand that. But at the end of the day, growth comes back, and it comes back with a vengeance around this time, between now and mid to late December. And it's like, okay, my value runs, and then and sometimes it runs out of steam. So that right there is what I'm watching for. And this concept and this switch that gets flipped is called the January effect. So keep this on your radar, and it centers around the Russell 1000 growth stocks typically. But let's move forward because this is the radar. This week alone, we don't have a whole lot of things. I think we have a 2-year note. Did this come out yet? You guys can tell me. Someone says 4. Yeah. So if something like Shift 4 is still doing good as a company, there are a couple of things to note on that. Going back to this last slide, the questions about Shift 4. I don't know this the fundamentals too well, but the qualifications here are that it needs to make good money, right? Like it cannot be. I don't want to be like in the it can have a very high PEG ratio, like price to earnings and growth. It can have a very high PEG ratio. That's fine. But I don't want to get stuck into something where it's like, losing money or doesn't have a unique moat where like, even if it's unique today, let's say like Instacart was unique today. I'm not picking on somebody, like not trying to pick on Instacart, but the business model as a whole isn't that unique because everybody could copy paste Instacart and they started to do that already. Like even your local grocery store, chain grocery store has started to deliver their food by themselves. Amazon Fresh will do that. And at a certain point, why do I need Instacart? And so is it so unique that it cannot be replicated, period, end of story? And that and also, so that's your competitive analysis, and also the leadership. So namely those two things: leadership, competitive analysis, uniqueness, and you have to decide in those companies. PCE is now confirmed to be delivered on December 5th, by the way. Okay. PC, got it. So this week we have a couple things. So did we get the 2-year note? Did we get a 2-year note? Yes. So I think we get a 2-year note auction today. This one could be a pivot for the day. By the way, if you've ever heard of the term the 210 spread, 2-year, 10-year spread, that is in regards to our 2-year note rate, bond, or it's called a note. It's not called a bond, but it's a 2-year note rate and the 10-year bond rate. And so whenever we have these two auctions, that can actually change the dynamics a little bit of the market. So pay attention to whenever we have that. That comes out scheduled, I believe, today. And then tomorrow, we get these two economic data points. One's called PPI, and the other one is retail sales. So PCE here is actually the market's favorite gauge from an economic perspective. To me, it's like my least favorite one, but this is the one actually that the market reacts to the most. That's an acronym for personal consumption expenditures or inflation. Like that's what that means. Basically, PCE is how much you're spending, and that is a reflection of inflation. PPI is producer price, or PCI, sorry. PCE is how much you're spending. PCI is personal, or is inflation. PPI is producer price index. PCI is personal consumption index. Is that right? Anyways, PPI is slightly more forward looking, slightly, than PCI, which is PCI, sorry, is the one that's the market's favorite index or number. But PPI is producer price index, and that is how much inflation that the producers are actually seeing. So like how much inflation is Amazon seeing, or Microsoft, or your local grocery store seeing for the goods and services that they're selling. And then that number is kind of extrapolated by the market to decide whether or not the manufacturers and producers are going to pass that cost or down to the consumers or not, right? So that's why it's a little bit more forward looking. And so that one is slightly important. That's why it's just yellow. Retail sales very close to, yeah, there you go. CPI, Consumer Price Index. Geez, not PCI, CPI. Thank you. I did. I meant that. Thank you guys for correcting me. I meant CPI, Consumer Price Index. Jeez. So, I need these captions, by the way, when I misspeak, which is pretty frequent. I misspeak all the time. Consumer Price Index, Producer Price Index. That's inflation, and that's producer inflation. So those are things that the market reacts to. Things that the market doesn't react to immediately, but after the fact, are things like retail sales. So this one's going to be interesting. It's interesting in the sense of like, well, sometimes a company like Nike might have or Walmart might have an immediate reaction to retail sales, but it's a knee-jerk reaction, just like we saw on what day was it? Thursday. The market has a knee-jerk reaction to non-farm payrolls. Always has a knee-jerk reaction. It's not usually the real move. So just take that with a grain of salt. It's very rarely the real move. The real move is always about how the market digests that first knee-jerk reaction. And NFP is greater than all of them. If you didn't learn this yet, I posted something the other day. Yes, NVIDIA earnings is extremely important, but NVIDIA earnings is not what moved them. NVIDIA earnings moved the market in the pre-market, but NVIDIA created that kind of exuberance candle, which I think is valid. But then the thing that brought the market down was multifaceted, quite frankly, but initiated really by that digestion of non-farm payrolls and therefore the rates. So if you learn anything, it's actually that while yes, NVIDIA is very important, non-farm payrolls is still more important and therefore kind of trumps everything, wildly enough. But that first reaction is still just that. It's just a knee-jerk reaction, and you shouldn't react in the moment. And it's always about how the market digests exactly that, which brings us to where we are today. And even today, all we're doing is digesting last whatever day it was, Thursday or Wednesday. And that is what's happening right now. So today, if I pull up the charts, my guess is that if I took whatever day that was it Thursday? If I took Thursday's high, yeah, we're not even over that level. Like I can show you this on my screen, these two lines. We're right in the middle. Those two lines are that NFP high. So we're still digesting that day. And that's how it's going to be right now. Meaning, look, the lows were in, but the highs could still be in as well. So what we're going to do here is we're going to take a quick look at a couple other things. My good friend Evan, who is not going to make it today, does a catalyst watch. So I'm just going to take a look here, going to take a look at a couple more things, and then we'll get on with the charts, and I'll show you guys what I have in mind, and you guys can hop in and throw out a couple of different requests. But so this is a Seeking Alpha Catalyst Watch. I'm just going to look to see if there's any major events. So dividends coming up, J&J, T-Mobile, eBay. I couldn't believe eBay was at $100. Oakland and MSTR. Okay, that's just where they are. That we get that. Earnings from Zoom. Nothing major here. Quarterly index review. Largest additions to MSCI World Index. CoreWeave, Nebius. Interesting. All right, that's cool. Dell, we're going to talk about this. We haven't gotten to earnings yet, but tomorrow, I think that Dell is going to be a tell for sure. We'll talk about it in a little bit. Michael Burry has teased the disclosure of release of some sort occurring during the day. What? Michael Burry's talking about something for Tuesday? Could concern new warnings from the famed Big Short. I mean, Burry closed his firm. I don't know. And there's so much stuff going on about Burry right now. I just kind of noise. It's almost become like a joke what Burry's got going on right now. It's just wild to me. All right. And Nevada Gaming Protocol, Best Buy earnings, Dell. Dell is going to be a big deal on Tuesday. I don't hate Toyota, man. I love Toyota. Actually. Starbucks, Deere, Lee Auto, season to date holiday sales. Did you guys notice that Adobe got integrated with ChatGPT recently? I don't know if that's good or bad, but it's interesting. Adobe's like direct integration with ChatGPT's image creations. Burry will sell his $300. It's not going to be a year. It's going to be a month Substack subscription. Let's be real, at least. And then Thursday, yeah, we're closed for Thanksgiving, and then Friday. So, in terms of volume, by the way, so I'll just say this: Wednesday, midday. So most of everything comes out by Tuesday. Middle of Wednesday, I would say you guys can probably take the rest of the week off. Nothing by the middle of Wednesday, everybody's pretty much going to be gone. They're going to be taken off for the week. Thursday we're off. Friday, I believe, is a half day. Yeah, peanuts. Yeah. I believe Friday is a half day. Yep, close at 1. Friday is I've tried to, I mean, over the years, I've tried to trade Friday after Thanksgiving, Black Friday. Oh my God. It's like you might get like, if you're a day trader, maybe a scalper, you might get like a 10-minute trade, and that is it. Like, that is it. So yeah, I don't think it's gonna be worth your time, quite frankly. You get like a little blip and then flatline for most of the day, most of the time. Here's the calendar. This is what I was talking about. So, well, he doesn't have it here. I have it here. Two-year note auction coming out in about an hour. Two-year note auction in about an hour. And then ADP's been weekly. There's a PPI. So consensus 3.3%. Core PPI is a big deal sometimes. That's pretty much it. I don't see a whole lot of other stuff happening here. Where's his earnings? And then we're on to earnings. But it's Tuesday after the close. So if you guys don't remember, Dell had pre-announced that that they're doubling their quarterly forecast. And if I looked at Dell's like chart, I mean, this one's wild to me. So Dell's pre-announcement somewhere over here. And then they got a downgrade. I don't even remember where, but they got a downgrade somewhere along the way. But they're down. They're down a good amount right now. And what is this from the high? They came down about 30% from the high, sitting about 20% from the high. Oh, will we be doing coaching? Yes. KVG's asking about, so in our private group, we do, so I stream Mondays here with you guys on YouTube. Tuesdays, I'll do it with Amit. And then Wednesday in our private Discord. And then Friday, I typically trade live in our private Discord as well. But yeah, we'll always do this. But Yeah, if tomorrow after hours, when Dell reports, if that report brings Dell back to life, say over, I don't know, 150s, over this level here, this is going to be important. If it brings Dell back over this general area and it can hold, this is going to be a big, massive tell. Because if it can hold over this one, let's call it 150 in general, I that's just going to be a tell in general that, look, we're just back on and there's full-blown appetite for growth in the market, AI growth. And that, I think, and hardware growth, that I think is going to be a huge deal. Probably going to affect the other stocks as well. This is a good spot on Dell, exactly a 50% pullback from the highs. If it doesn't, then this guy comes straight back to about $100. So this would be a guessing game to try to trade this into earnings. But it's about how the market digests this. Is it an overnight thing? No, that's not what I'm talking about. I'm talking about, does the trajectory after earnings take this over 150? And does the trajectory take this towards 100 post earnings? So I'm not talking about a trade. I'm just talking about, where does this go after earnings overall? And this, over the next week, this will probably give us another gauge of the market sentiment for AI and for the growth around that. Umbrella, by the way, I think this is a networking company, AMB. This one, AMBA. This one interesting. Yeah, this is a local company. I think this is in my backyard. I'm pretty positive it's in my backyard, like right down the street. Yeah, Edge Networking. I think they had a killer quarter last quarter. Yeah, this was a massive quarter last quarter. Edge Networking, look at this. 25%. Might be a sleeper, might be one of those January effect companies. Umbrella. NetApp, always a decent company. CleanSpark, nah. Autodesk, Nutanix, tough one. And Zscaler. Zscaler is exactly the same. It's a direct competitor to Palo Alto. Palo Alto and CrowdStrike, by the way, usually both sell off on earnings due to really just high expectations. And these end up being buys post earnings. You just want to see these get some footing underneath them beforehand. And that's it. I mean, again, there's no reason why a lot of people are going to be sticking around more than midday Wednesday. There's nothing happening here. So this is where we are. And I think that's as I see it, looks like, let's see, is there anything else? Nope. That's the catalyst watch. Tom Lee. You know what? Treasury Edge. Let's see. Did Tom Lee? Here we go. On the 29th. So as of last night, as of yesterday, they added an additional. Oh, that's a pretty big buy. That's, what is that? 70,000 ETH. It's a little bit bigger than he was. Not that big. So 300, 100,000. Come on, Tommy. You got to step this up. I want to see a bigger dip buy. I want to see a beefier buy than this. I don't understand this. If he thought that 2,500 was a low, wouldn't you think that he would be loading up like heavier? Right here. Tom Lee has beautiful hair. This ticker, this account, by the way, is called Treasury Edge. They will update how much he's buying. So as of 11/23, 3,629,000 ETH. Not a small amount. I don't know if he's expecting a bigger dip or if he's already fully allocated, or maybe there's just maybe there's rules or something in his in their bylaws that they have to allocate everything. I don't know. That's possible, actually. All right. So that's it. One last thing. So this is the FedWatch tool, by the way. So where we were here at the highs with a 91% chance of a December rate cut coming. This is for December 10th. This is what it's all about right here. 91%. Then at the lows, this is how it works. At the lows, we were only 42%. As we've come kind of creeping back to the highs, this is what has happened. So the closer that we get to the market pricing in that rate cut for December, the higher that we go. Just a heads up, just a little warning. We're currently at 79.14%. At the lows, we're at 42%. So it is very much driven nearly 100% by the probability that the market believes we're going to get that Fed rate cut in December. And I'm telling you now, if at the highs, we were pricing in a 91.72% probability, then, well, that's nearly 100%. So I don't also believe that we're really going to get that much further above. So that puts me in a kind of a tough spot. What I'll do, I'm going to pull the indices really quick because that's usually going to be my first look. Let me go ahead and change my view just so you guys can see stuff, because I know this is going to be far too small for you guys to see anything. By the way, so TradingView updated their terms and conditions. So if anybody here is using the NFP indicator that we have through Lux Algo, and it's probably glitching right now, I got a message from them. We're gonna migrate that. You guys will have that. Might take a little bit. So for right now, you have to do these manually. So it's just a quick line, top and bottom, just as it always has been. But actually, you guys want to do a quick little, I don't know if you want to do a training. I'll just do this. I will just show you guys why. So why NFP matters, right? So market, this is going to be, that would be a glitch. So markets are always priced fundamentally based on just general PE, right? But this is what non-farm payrolls is. I'm not going to go super deep into it. But why? So if more jobs are taken, that's why this data point, this day, is directly correlated to the stock market price, and that day's and the probability that the market puts on how likely we are to get a Fed rate cut or hike, right? But it creates a fundamental event. It is a fundamental event, and that event creates a technical level, weirdly blending fundamentals and technicals, right? And honestly, 90% of the time, this, which is normally the first Friday of the month, it wasn't this time, marks the high and or the low for the rest of the month. In this case, there's only a few days left in the month, but it is what it is, right? And from here on, what we're going to look for at the index level is very clean, right? And this is a system, right? We're looking for like 2 to 3 daily candles, like opening and closing above or below the last Thursday's high or low. It's as simple as that. Not easy to see on the screen, but it's very simple, right? And we're looking for the opposite. So it's either going to open and close completely above or completely below, right? And other than that, what we do is we expect it to be range bound. And if it does give us this, what we call trigger in trading, then we know a trend will be will be created, right? We know that I don't take that day as a trigger, right? Which is why I was like very adamant. No, we don't press a short here on that date. No matter how bad it looks, we rule. This is a rule set. Rule number one. I'm not looking at that day as a trend. It's a knee-jerk reaction. And I was very adamant. We're not taking the short, right? Number two, right? If the low is not broken, I'm thinking that we go right back to the highs. This is a rule set, hard and fast rules, right? And then rule number three, once a level is broken, which going back to the last slide that I showed you, that's what broken means. Then I will go to the next level, which I'll show you what that is. But very simply, we have passed this rule, right? Because just because it might be strong, by the way, these are years old. This is not a new thing, but it does not define the trend. Trend is defined by how the market digests, right? Higher low is not broken. Look, it's going to be a magnet. So do not trade when it's close to the level. No, but I expect it to bounce between the levels until one is breached, which means that if I didn't break the lows, which I did not, I actually expect it to go to where? Thursday's high. Very simple, right? Which is the next level in this instance. And we're just repricing the market to the value of whatever assets were on that day. When we talk about this and we talk about market structure, I'm looking at this kind of stuff, right? I'm looking at this kind of bounce. I wanted to hold, and sometimes I don't like to trade very close to that line in the sand. I'd like to see some kind of higher high confirmation, and then I'll enter in like multiple high lows. Screenshot this if you want to, but if it actually breaks through the level, I want to be very cautious before I really start to move in one direction or the other, whether this is to the upside or to the downside. In any situation, this is what structure looks like. Anyways, enough of my yapping. Sorry. Simply stated, though, this box, boom, right? That is it, right? And so those rules, I mean, it's very, I mean, it becomes obvious here, right? And so so the question is, can I give an example of the chart? So this is a live example of the chart. This was the low of Thursday. What I needed to see if I was going, if we think that we're going to go low, I need to see, and we do this live. This is what our private group coaching is all about. It's walking through this as we go, like day to day, week by week, and walking through where we are in the trend count, where we are on certain trades. It's more of a very specific things. I'm looking for like multiple days like this, below this line in the sand. And then for everything to be like all clear, I'm looking for this kind of thing. And the question is, do I have this? Well, no, I don't have this either. So what that means is right now I have to traverse this range. And this range is from here. And I usually make this entire trek, by the way, within 24 to 36 hours, the entire trek. So I expect us probably by tomorrow morning to probably be somewhere towards 675, believe it or not. We're very close to. And then when we get there, I expect us to probably get very close to the lows shortly thereafter if I don't see this, quite frankly. Because unless I break this range, we actually traverse this box very quickly. But that's all we do. We actually don't leave this box. And to the person that asked, like, can I show you what this looks like historically? Ooh. Oh, this is really not updating live right now. You know what? That's okay, because I have this super historical. Here. So like here's just an example. Here's like an August NFP here. It's a similar thing where, all right, the highs were locked, but the lows were locked. You actually made an attempt. You get very close to it, but I'm looking for 1, 2 days, right? This day is not an open and close. This is one day. I'm looking for 1 or 2 days. This second day, boom, we're going down. We're going down. Actually, even this, you're going down to the next level, which is just simply this level, which happens to be basically where you stop. And then if you get that same up above, it's very much, that's exactly where you go. But this is a systematic approach. You have another NFP. This is a daily scale. Day, look, that day was a very green day, by the way. It's very rare that you have that full continuation. Second day, no, this is the third day, just fully to the downside, but you get right here and then right back to that one and strictly right back, and then you start blowing through, which are, these are NFP levels, literally through these levels. And sometimes it's just choppy. Here's an example of choppy and why we very much wait. So this is one day, full day, but I'm looking for multiple days. Anyways, this is what this looks like, but I'm not gonna go right now. We have what we have now. Might have to update mine. I have some screenshots. I'll have to pull some historicals because I just deleted. It looks like I have trading view. Like I just changed their T's and C's, so I have to get mine migrated over. But it's roughly about this 650 right now. And what we can say is it's roughly about this 640 below it. We have not done Salesforce, but this is where we are. So if we're below 650, which it has been, it's the trajectory is going to be down here. I think we can bounce up to 675, but at that point, I can't say that we're actually going higher unless we have those like full-blown days above this level. And if we do, though, we're looking for a full day open and close above, then and only then, actually 700s are fully intact, nearly like a foregone conclusion, I would say. Very much so. We'll have December NFP by then, but at that point, it's basically game on. So that's what we're looking for. This is the power shift, if you will, in the market, 675, and above that, it's game on. Until then, 675 is where the bears like really step in, and you probably need to start taking measures. All right. The rest of which we do want to watch the dollar. Dollar's been a bit of a canary in the coal mine over here. This is just slightly over the 200-day. 200 is the red line on my chart. It's getting a little choppy over here, which is about like to be expected. I don't want to see this one get too much higher. If this flips to the upside, we might have a push higher on that 200-day here. Would probably be that pullback from that 675 to 650 on the S&P 500 index. Gold, wow, looking very good. Is anybody in a gold trade right now? Gold looks like it wants to traverse back into this 30. Wow. This thing looks like like Google right now. She does not want to let up. Holy camoli. Good night. It's a hard one to take long because it made such a huge move, but that thing is holding steady. Let me see the gold volatility index. GVZ. Nah, I'm not seeing it step in here. Not seeing the gold volatility index give me confirmation here. I'm actually not seeing that, so not yet. But I do want to take a look at ETH. This is the VIX around 20. That's kind of low. So I think we're, ooh. Did we make this trek? We're about to knock on the bear's doors here. So I had taken on Ethereum. I think it was like the full thing. It might have been like the full gamut. Wow. We made it. You guys did. I think you might have said it. Okay, this is a big deal. This is actually a big deal. Oh, is this why you guys are getting excited? This is a huge bounce. Okay. So here's ETH's prevailing uptrend right here. Very far away from this 20 and 50-day SMA. He goes, we are so back. ETH to the moon. Did you see my post on X? Poking the bears while they're sleeping. So funny. And honestly, like from a weekly perspective, it's just like, I mean, it's a good spot. Like I don't know what else to say. Like it's just a good spot. It's a good spot. It's not like the best spot. I mean, the best spot's in the 21s, but like, for right now, it made a lot of sense. It made a lot of sense from a pullback perspective. It was literally right on my 2635, whatever it was that we talked about way back when. 2635. I mean, that's nearly to the penny. It fills a fair value gap from right here, 2635.50. It's still possible that this breaks, but it's the general consolidation. I would caution this with like, hey, look, it's not out of the weeds. In reality, what this probably sets up is, near term bullish structure. A lot of people, I'm not a pattern trader, but the pattern traders will say like, hey, look, this is going to set up an inverse head and shoulders if this breaks out. But keep in mind that the power shift, I'm going to call this a power shift. The break of this structure is over 4K. So that's not in play. This inverted head and shoulder is not in play unless you get well over that level. And I would say that the first point of interest is going to be in this general vicinity of like, see these upper wicks over here? 1, 2, 3, the fourth one that you hit. Any of this is part of a fifth attempt. Any bounce here is going to be part of a fifth attempt to get there, right? But take a look at this for just a minute. And so assume that all of this bounce is a pullback in terms of a fifth attempt to revisit these highs. Now, that said, it's very possible that that fifth attempt can get rejected, right? And show up here. In this moment, the bears are going to be like, oh, I got you, right? And they'll be like, oh, it's going down. It's going down. Don't fall into that trap either, right? Because I think that the reality is that is just going to set up more consolidation. So I don't want you to fall into either trap, right? It's probably a double trap. It's probably a bull trap here. It's probably a bear trap here. And the truth of the matter is that this is what we would call just like consolidation, which essentially does resolve itself up and to the right. But this is why sometimes leverage is not your friend and patience actually is. Trade location matters. And I do believe that that was a decent trade location. Does that mean that this is it? No, because the bears are still there and it can still come in lower. And even if it does, and if it does come in lower and then bounces, this whole situation that I just drew out is not invalidated either, which is the wild thing, right? The wild thing about that is that this whole thing I just drew up is still not invalidated. It's just not, right? It's almost like more likely. So like, no, I don't mind this dip buy in any form or fashion. And I love a dip buy lower too. So yeah, I like the spot. I would love it lower, but do I think I'm gonna get it? I don't know. And do I want to be overly picky? No, I don't. Because I don't know that I'm going to get it. So there you have it. That's where I'm at on Ethereum. Can this show up as another head and shoulders whatever type situation? Absolutely, you betcha. That's why I'm saying don't get overly, excited. Does this set up for a very exciting bounce? It does, but I still think that the rest of this bounce from here is very much about Thursday night dinner. Thursday night dinner is going to decide whether or not, like, we're poking the bears right now, guys. Oh man, we're poking the bears. and this could really get to that nearly 4K level, which for a trade right now, that puts bmnr firmly in one of the best risk reward. Let's get there firmly into one of the best risk reward spots out there. No way. Okay, that's not it. bmnr. I'm like, no way, it's $50. Look at this, 29 bucks. I mean, I bought this thing at like 26 and change. So where does this put bmnr here now from a risk reward perspective? So first of all, let me define this phrase, risk reward. When I say risk reward from a trading perspective, that means high risk. It means high risk. It does mean high reward. It doesn't have anything to do with your trade size, but what it does mean is that you should take early profits very quickly because it's high risk. And high risk means that, hey, look, I have a very snipey type of entry here. And that means that my stop, I would have to say, look, there's a certain point at which that I'm just going to be wrong. And that would be like around 24, 25 bucks. So in a high risk, high reward situation or trade, I can size however I want to size it. That has nothing to do with anything. But it puts me in something like this where if ETH is back to 4K all of a sudden, I think that puts bmnr into that $40 range, $45 zone. So yeah, this is the ad spot. If you're long, so here's what you don't want to do. You don't want to be sitting there moping around because you bought it too high. Like that's what waiting. You don't want to be there sitting there moping around because you bought the highs and sitting there waiting for it to get back to your cost basis. That's not how this works, right? If you bought it at the highs, you bought it at the highs. Oh well, get over it, right? Just saying this is life. If you oversized, lesson learned. But at this point, your next pullback, your next dip, this is probably from a trading perspective. Look, 39s, 40s, which by the way, that's like 30% on equity. If we can get there, optimistically 40 plus, that's a lot of percentage on just stock. At which point you need to start selling. So, because you're gonna, that's what high risk, high reward means. You could sell whatever it was that you added and be back to your normal whatever. But that's what this is an 8-to-1 risk reward. 8-to-1. You don't find that type of trade very often. Even if you took this here, it's a 1-to-5 risk reward. In trading, primo setup. Which brings me to hoodie. And you know, my good friend Amit wasn't like super into this level that we were, but I kind of was. It's okay. We don't fault him very often, but we will on this one. Not joking. I kid. Still bag holding at 51. Still bag holding at 51. But what I'm saying is this is your opportunity to not be a bag holder at 51 and be more of a shareholder at 30. Anyways, but if it doesn't work, then you got to rip the Band-Aid off because you know it's going lower if it goes lower. This is the first time this last week, and I even posted that I was buying things. Like I rarely do that. Like I really say, like, look, I'm buying. Super rare. This, yeah. DCA. Yeah, that was literally my point. It's a good DCA spot. It's a very good dollar cost average spot. And you don't want to let that go to waste. In my opinion. Sorry, not financial advice. Holy crap. I'm not a financial advisor. Robinhood also, so same kind of thing. We all have to be very cautious in general because we don't know if the market's going to be re-rated. Things like bmnr, things like Robinhood, they can turn on a dime. This is not a big bounce for these stocks. They're up a lot of percentage right now. Today, what is Robinhood up? 6% up today on Robinhood. How much? What percent is bmnr up today? bmnr is up 13% today, right? Said I bought it. It's not a lot for these stocks in considering where they are. Robinhood and bmnr can be at $40 by the end of next week. I'm not joking. They can equally be at $20 and $85 at the end of next week. Also not joking. So you have to, because of where the market is, technical analysis and the market is very much if this, then that. I said that we are on edge. We are at a point where seasonality meets like low liquidity and volatility. The volatility is rough right now. It's rough. The wrong tweet, the wrong headline, the wrong shift in sentiment can catch the market off edge, and there's not going to be anyone to catch it from falling or pull it down from getting too high too fast in either scenario. So if one spark can create in this moment a rapid acceleration in one direction or the other because of the liquidity environment. So it's an exciting time to be a market participant, especially one that's cash flush right now that you guys might be. I mean, very exciting time. And to be able to move with this speed and aggression with these type of levels, like this didn't exist for your parents or anybody in it or any other generation except for our generation. This is a new thing. So appreciate it for that. Just know that what we get to deal with is kind of new for everybody else. He's a powder keg. Yeah, powder keg, definitely. But this level of interest here on Robinhood, with this much with this big of a traffic zone, we just hadn't seen that big of a traffic zone on Robinhood in a long time. Also, we did have a bit of a slightly double top, and kind of like this neckline here was right about there. Actually, I believe that this, was target acquired, for the most part, right there. Boom. So target acquired on the downside, hit high traffic zone here. First target acquired. If it goes lower than $100, then yeah, the downside was really like 95s. But if it breaks 95s, then I will tell you now we are going to see 80s, or like we're going to see 70s, really, like high 70s, high to low 70s. That's what we're going to see, but not before we lose 95. If we lose 95, then yeah, this is happening. Statistically speaking, it is a high statistical probability, but until then, no. And until then, we are still in a downtrend. It's just a bounce, right? And as much as I love my stock here, I need to get above 119. I need to get above this area right here. Call it 120, 120s. So for now, I'm pretty positive that we're going to run into 115 kind of resistance, right? Then structure is going to look like this. I want to see 123 hit. Then I want to see today's high hold as resistance, hold as support. I want to see exactly this. And so this, since I might not see you guys between now and then, because this can happen quickly, this key level here is going to be 111. I don't know that we're going to get that. So it's roughly 112s. I think we hit our head somewhere in this general vicinity around 115, right in this general traffic zone right here, 115, 116. I think we hit our heads right around here. And I would like to see a little bit of a pullback. And if that pullback can actually hold this lower bottom of support around 112s, and then the next bounce actually get up over 116, definitively 120, which I think it would on the next one, and then it come back down and hold over this 116, which would have been where it stops. So I'd like to see 1, 2, hold in here, here. Then I want to see that holds. Boom. This moment right here is the moment that I would say we are out of the woods. So there are things that need to happen. So 1, this has to happen. 2, this has to happen. It's a series of 4. So it's not about sniping a low on Robinhood. So these 4 things need to happen actually in this order. And if they can happen in this order, then, and only then, we are out of the woods. And what that would look like is market structure. 1, 2, 3, 4. Literally that. So we are here on Robinhood. I want to see it make a higher high. I'll see it make a higher low. I want to see it make a second higher high. And then on that second higher low, yeah, we are probably going to be out of the woods if and only if I can see that. And that higher low is going to show up somewhere around 115. It's not the first time it gets there. It's going to be the second or third time it gets there, somewhere around that. And if it does at that point, but not before, then we're out of the weeds and we're off to the races once again. But this journey that Robinhood's on, if and only if it can get there, it's gonna take a little bit of time to play out. And these levels here at 123, between 123 and 116, are the critical pathways to get through. So this, I assume, will be resistance. And then I want to see this end up showing up as support, right? So I needed to get through one more level like this, and then I want this to show up as support. And it's at that moment in time that we're out of the woods. All right, so It is our generation. It's a special generation for sure. Did I say I will leave us? No. What time? I'm not leaving. No. All right. Okay. I want to do, what do you guys want to do? You want to do? I want to take a Palantir along. Oh, there it is. So I also bought this one. Oh, you guys. It was here. See, I know you probably slammed some tickers, but these these are the ones. So also not completely out of the woods, but where they're like right there, like ready. Yeah. These are the stocks that I'm like, these are set up for the biggest bounces in the next few days. Bigly bounces. Is that a word? Bigly. But 169, this is like 170. So like another $5 in very short order to this yellow line. Where at that point, I think it hits its head. And then there's this, and then you want to see this. So very far away from that, but it's this right here. And so that is 162.50. From a trade perspective, high risk, high reward. If you snipe this low on Thursday or whatever day it was, cool. Or if you got in anywhere this morning, cool. If you're watching any of the streams, you do need to take a little, what we call safety trim. And then you do expect this kind of bounce. If you, any pullback in this general vicinity is probably fine, but you don't want to see this get lower. And then if this is that same trajectory on Palantir, look, this actually, this is probably, I think this is probably accurate for Palantir, but this is that next trouble zone. Not trouble zone. This is that resistance level. So whoever was buying in this area, you think about this like a story. The people that bought down here, because they were, it's not up at the highs. It's that they were picking it up down here. See these buyers, these people in the 170s. When you get to this level, the people that were picking at it over here, that's the thing. When they pick at it down here like this, and then they have a big drawdown like that, and then they get back to it in this moment. It's like, what do these guys do to you there? And it's all about that. So it's like, do they? And it's all about this moment right there. Expect that they sell off. Expect that there's some people that are going to be weak-handed and that they sell right here at that moment. And that's why you expect this pushback. It's the rest of them that didn't sell in this moment. Do they look at this and this general area and say, hey, look, do they in that moment actually start to buy? Does support become a bit higher zone? Does support actually show up now in this area somewhere here? And so expect this, right? But then does it get bought back up like this? And how aggressive does that happen? And does it do it to the point where it can start to breach through the rest of the sellers that were here? And expect a bit of a chop like that, just like that. And eventually, do these breaches become taller and taller until eventually there's no more of them, and then poof, you're off. That's what I see for this chart. Expect lettuce hands. Yeah, expect them. Expect them. Expect them. Because the other thing is too, there's a lot of discounts out there. Like there's a lot of discounts out there. So I mean, I can't blame some if they do. Not that this isn't like a great company either. All right, I saw a Netflix request. I did put a chart out there. was kind of bearish on Netflix. Netflix, one that's not getting a bounce right now. I don't hate Netflix. Let me just be crystal clear about Netflix. And Netflix at the moment is not going down. So you got, so this orange line, pre-market high, pre-market low. So this blue line is last week's low. It's not going up either. It's sitting right in the middle. So I might leave Netflix alone. Netflix is going up over 105.40. I mean, it's only going up a little bit. It's going up to here. But and right in this moment, it's probably going up to 105 in this exact moment. But it's below 103. And that London session low, that becomes your pivot here. So below 103. So definitively like a close below or tomorrow's open below. If the market gets bouncy, then the market gets bouncy. And I think maybe like where do you pick it up? It's almost like the Robinhood and Netflix are kind of in a similar price point. I don't think it's a lot of pain for Netflix, quite frankly. I just don't. For me on Netflix, it was like a couple of things. One, there were other things I wanted to buy. You guys saw a couple, like these were immediate, more upside for certain things, like a bmnr, maybe like a hood, that were at a bigger discount. And on a Netflix chart, for me specifically, like you have to take everybody's personal situation separately, but for me specifically, I didn't have a whole lot. It was already at a good like profit, and I might as well like, hey, it made sense. And the chart was just like, it's probably it looked like it was gonna get a little bit worse before it got better. And what a little bit worse looked like was, quite frankly, a little bit. And that's like 97. So this is, I think, a product of post-split woes, if you will. Sometimes stocks will run up like a little bit of a blip up on the split, like, oh, I want to be part of a split. Honestly, a stock split is a nothingness, right? And then you get the split, and sometimes if you have an odd number of shares and people are like, oh, okay, I can start selling premium or different kinds of premium, they will start to sell off like a small portion of them. And I think that's kind of what we're looking at here. The chart is a bearish, the chart is in a bullish to bearish reversal. That I will not deny here. But it's also at the lows. So what I will say is it is not really a panic moment on Netflix either. Is Netflix still going to 100? But I mean, it's basically at 100, dude. It was at 102.99 this morning. So I mean, I'm not really going to be a nitpicker about is it going to 100 or not. It was at 102.9. It's close. But I think that this one, if it doesn't get below that 103 this week, it's probably done going down for right now, and you'll probably bounce first at this point, and where it bounces to is probably closer to that 108 before it makes its next decision. So it'll probably be towards that 108 and then probably stop a little bit. This right here is that last, this is that last support level. So right here. So whoever was, it's the same story, right? So whoever was buying here, not even 108, probably like 107s. So these guys, this is the first one. So whoever bought here, which almost was just like right here. We already saw them like 106 here, insta sell. I don't see any highs here. I just don't see any extension lowers. So this is probably a little bit more sideways first before it bounces. Right now, probably a little bit more sideways first before it bounces, if it bounces. But if it's over 105, then yeah, you're gonna have a couple dollars of a bounce, and it'll get back to this section, and then it's gonna be up to what do those people do over here. And at that point, I think it'll have a little bit to do with the market sentiment. It's probably gonna be sideways, but unless the market shifts, the current setup tells me that that would actually be a downside move to complete the 90 to 97s, which again is not that big of a deal, especially if you're, shareholder record at like 10. Like, what do you care? It's not worth anything. It's not a big, there's like trading ranges. So that's Netflix as I have it right now. So unless it's continuing to make new lows, you probably put it on a rest for a bit. And this, if the market takes a little bit of a bounce, which it looks like it might, could have a tiny bounce in it. But this is not the kind of a bounce that I would see like the rest of the market has. It's a small bounce right into recent resistance. Although I will say, I watched The Last Samurai, and that was actually a good show. Oh my goodness. Did I put Miss Cleo on the... Oh, do you guys want to do Miss Cleo? I totally forgot. Let me do that. Let's do Miss Cleo really quick, and then we'll probably call it. All right, let's do it. Okay, you got me. You got me. So, my bad. So, Miss Cleo did give us a forecast. So she gave us 2 forecasts, you guys. Oh, she gives us 2 forecasts every week. So what I did, she gives us a stock forecast, and she gives us she gives us a stock forecast, and she gives us a crypto forecast. This week, I pulled the crypto forecast because I think it's an important one. So if you guys are cool with that, I'm cool with reading the crypto forecast also. But this one is a stock forecast. Wait, I do tarot. So we got some noobs. No, I don't do tarot, but I have a friend. We call her friend. I call Miss Cleo, and there's this thing. I do the technical part of TA, and then there's this other person, Miss Cleo, who does the other version of TA, which is like tarot analysis, and it's like a running joke. But sometimes she's wildly accurate. But the way it works is she gives us a theme card at the top, and then you get a card for every day of the week. In this case, because the market's really open 3 days, she gives us 3 days for the stock market. And so whatever this means, which is, I don't know what it means, but she'll tell us in a second. This is the theme card for the week. And then you got a Monday, Tuesday, and I think a Wednesday. Got the feeling daggers. Monday, bro, caught the falling daggers. I mean, I like that. Monday, dude, it's caught the falling daggers. Yeah, I can be good with that. So maybe that's a theme. I caught the falling daggers, and then 10 of wands, I think this is called, and then the Queen of Swords, and then the King of Wands. So we go 10, Queen, King. This actually all looks pretty good to me. So I know nothing about this stuff, so we might as well see what she actually has to say. And so this is what we get. So we get a theme card, and the theme card is called the 5 of Swords. This reading is compressed. Oh, she gave us a note. The reading is compressed this week due to Thanksgiving. Yes, we know. Okay. We're moving to the 5 of Swords from the King of Wands. Whereas wands are impulsive and energetic. Swords are choppy, trappy, and dangerous. Yep. This card implies a week full of traps and price action that may seem unfair. One side will be cheering so loudly it will be annoying, to say the least. I'm actually I'm with that, right? Anyways, there's a high probability of mean reversion. Look, Miss Cleo's on our side, you guys, or my side, whatever. But the week may close flat. So if you do play Friday, consider playing the opposite of the Monday through Wednesday close. There you have it. There you have it. I'm actually not against any of this, but there you have it. So Monday card, 10 of Wands. This card says the worst is over. Yep. Although she's late because you guys know when we called it. But we have we need to muster enough energy to make one final stand. This typically results in topping or bottoming action. And since the theme card is bearish, we could see a final green day for the week. We're following the Queen of Wands, so I wouldn't be surprised at a mini repeat of Friday. The last time did she typo or am I dyslexic right now? The last time following this card was a similar setup and resulted in a 0.5% gain of the day for the day. Okay. Look for impulsivity and a decent day trading environment if a trend is established. I would not fade it, play it. Yeah, cool. I'm with it. All right. Caught the falling daggers. He goes, let's go. Tuesday is the Queen of Swords. We have a possible series, 10 Queen King. So we'll need to keep an eye out for patterns this week. Yeah. The last time it followed the 10 of Wands was a similar setup from Friday to Monday, and resulted in a third green day. Ooh, I expect a lot of chop, but you can test buying dips here. On Tuesday? Okay. Test buying dips on Tuesday. Maybe for Netflix. I don't hate that. Wednesday, because I did like that show, The Last Samurai. Was a good show. Did you guys see that show? It was a good show. This day will be impulsive with a strong chance of developing a trend. All right. Therefore, expect to chase momentum. It has a preference for continuation in setups like this. So that could result in 3 straight days in the same direction. Oh, she got real bullish there. All right. She got real bullish there. Wowzers. Okay. Thursday closed. Friday, Black Friday. No read for today. Liquidity will be low and the market closes at lunch. I mean, that's it. She basically just said, like, it's possible. It's a straight green God candle for the week. I mean, I'm pretty sure that's what I just read. But then I also kind of read these nuances of like, but she really has no idea. So I guess there you have it. But anyways, the theme card spells a bit of danger, but the daily cards are mostly positive. We do have some trend days ahead, so play the side that's winning when prompted and don't fall in love with any shorter term positions. I mean, I can get with that. Does this mean, wait a second, does this mean no one is going to yell at me during Thanksgiving dinner? No, it does not mean that. It does not mean that at all, my friend. It does not mean that. But there you have it. That's Miss Cleo. I have not read this one, so I'm going to take a look at this because I want to. This is a selfish thing. I don't care if you guys want to or not. But she did give us a crypto read, and I wanted to read it because this is the crypto day. This is the day. I'm just curious to see what her read was. So here we go. So her theme card was 8 of Wands. And then theme card for days. This is what, a 4 of Cups. This is just the crypto market. 4 of Cups, 6 of Pentacles, Pentacles, and then Judgment. Yeah, I don't know. And then we go, okay, so 4, 6, 8, 4, 6, 8. Okay, we're building 4, 6, 8 building, and then Knight. I mean, whoa, but he's got 1. It's a 1. I think this is okay. In judgment. Wait. Does this mean we go to the heaven? Oh, dude. I don't know. But we have more than we started with, because we started with 4 and then we have 8. We doubled. It's not poker. All right. So, anyways, so let me stop guessing here. So she says, this is how little I know. 6 of Bitty coins, ETH to 8. I mean, you guys are about where I'm at. I have no idea. Theme card. Last week's theme. I didn't know this. See, this is why I don't know. Last week's theme in crypto apparently was the final death. Had I known that last week's theme in crypto was the final death, well, that might have changed my sentiment even more so, but I didn't know it, and I still thought it was the final death anyway. So that's fair. And it was true to its name. Oh, dude, Miss Cleo straight up is calling the bottom also. Wow. I just said also because I didn't actually say that it was the bottom. I said like maybe. Valhalla awaits. Oh man. The selling was intense and relentless. This is true. The market panic was palpable. Yeah, I could taste it. was the capitulation? Was this the capitulation that crypto needed to form at least a temporary bottom? Okay, so there she goes. Okay, so now it sounds like we're on the same side. 10 to 8 could certainly indicate retracement. This particular card suggests rapid movement and impulsivity. I'm just saying there will be a lot of action this week. Day traders should be happy. It carries a slight negative bias as a daily card, loves to trend, and prefers continuation to reversion. All right. This is a concern, but note that when drawn as a theme card, it often finishes near flat. Dagger to the heart at the end, huh? I don't know. Yeah. Monday, 4 of Cups. This card represents apathy. Right. Definitely feeling apathy, usually as the result of mean reversion. It can also represent the failure to achieve price target expectations. Well, there you have it, guys. I think so, but I don't know, is what I just read. Maybe close, maybe not this close, but not quite. This means that we could see a green day here, but we may not reach the moon but on the first try. She says not chase momentum. All right. This card says we'll be in a position to give or receive charity. The way to play this is as follows. Oh, she's giving a playbook, play by play here on Tuesday. A gap up or early rally gets sold. I'm actually with this. Possibly trying to bounce from the lows. Or, so green open, sell. Gap down or early selling results in a bounce that probably sticks. Okay. Also with this play. Red close or red open, buy. Whatever the lows is on Tuesday, buy. Just don't buy the highs on Tuesday. Don't buy the euphoria of Tuesday. Probably buy the desperation feeling of Tuesday. I like this. I like this sentiment, right? A mean reversion close is likely. Generally speaking, I like this sentiment. Buy the desperation on Tuesday, not the euphoria. Wednesday, judgment day. Wednesday's judgment day. Look for mean reversion again, right? And a possible trend, especially if Monday closes green. This one rarely trends green, and the best case for bulls is probably a flat day. Okay. Look for some liquidity to be targeted and filled. Price should correct the value area. All right. So so again, don't buy euphoria, buy desperation Wednesday. Thursday, 8 of Pentacles. The stock market will be closed. We got that message. So we can expect come on, this is the biggest day. Fair amount of shenanigans. This card represents the work required to achieve long-term financial goal. Okay, we know this, Miss Cleo. I'm here for this day. We're not ready to harvest, but we're close. We're close. Okay. This card is choppy. Oh no. But skews bearish. It has a 10% chance of closing green. Does that mean a 90% chance of closing red? So the best case for bulls is likely a flat close. Ooh, I don't know. You're right. Let's see. That's what she said. That's what she said. Friday, look for an impulsive day here. Oh, she's calling death. Look for an impulsive day where rallies get sold. Like Thursday, the best case here could be a flat day. The morning should be more active than afternoon. Trend is unlikely. Guys, I don't know. Shenanigans. Shenanigans. There isn't a lot of bullish energy to lean on this week. We have lots of mean inversion and choppy days ahead. Yeah. Okay. So she's kind of calling what I just put out on charts, which, by the way, if you didn't catch it, if it was SPY, SPY, was like, okay, we go here and then we go here, like all the way back. And the dips can be bought until we get there. This one, in this instance, we could get all the way here to 682. And if that's the case, cool, up there. But then we go back to there. So I am in all seriousness saying this, legitimately, in all seriousness saying this, is possible. But we get there, best case scenario, what you see is this. That is flipping. So from a trading perspective, and when you actually act, we are in phase one, which means long and strong. And then you get to this type of area, that means stop, pause, see what comes next. I don't need to take this short here. No. What I need, I actually probably wouldn't. I would just pause, and see what happens next. Do we fail? And if so, then I will, right? But not before. Because I don't want to get my face ripped off, because if we extend higher, yeah, you betcha I want to be in this. And I will be. And I will be in that because I'm not going to just jump the gun and instantly reverse course to go to the downside. I'm not going to do that. So is it possible? I don't want you to think that that's not possible, because this is very possible. But TBD. Kind of crypto after all. Yeah, very much so. Yeah. And in terms of ETH, I don't know. I already put it out there, but I think that's where we are. This, in the meantime, look, this is very much like, listen, a reprieve. Oh, yeah. Give me. I want to say deserved. I think if you've held out, it's well deserved. It's a well earned reprieve, and I think that you should enjoy it for sure. And if it goes, absolutely. So, but this I think is reinforcing. Not that it matters, because it's just tarot, but it. I'm coming off of a tarot card reading, you guys, and I'm talking about this. Reinforces what I just said. A high risk, high reward entry requires early profit taking. That's all that is, because we're not out of the weeds yet. So I would just caution getting caught up in the mass euphoria, which we will see it. But that entry price, I don't care what she says. That's a good entry price. And good God, if that means that I have 25% to the upside, yeah, I'm in. I'm happy about this. And a couple days of downside to back to 3,100, dude, all about it. Because who's not about that? Anyways. All right. So it's about, the market's about to close. So I'm going to take a break. I appreciate you guys. I'm going to hop in the server a little bit. In a little bit. I can check on some things. Yeah, Netflix not going down right now. Netflix not going down right now. Palantir probably going up. Probably. Hoodie also probably. But I don't know that you want to press these bets right now. You probably want to buy the next desperation pullback. What else did I have on my radar? I want to check on some of these. Not so much. Apple, wow, 276. That's just insane. How's Google doing right now? Google, this guy is just so headline dependent. So headline dependent. I don't think I could chase that at all. No. How's AMD? We're taking a look at AMD. Yeah, so a lot of these look good for some continuation bounces. I think if you get any red in the morning, a lot of these that just started a little bit of bounce, like this does not look bad. Like that. Just like that. nvda. Most important stock right now? Not doing the deal, but not going down either. That is not bad. Gold run. Yeah, I like gold. Coinbase. No. So Coinbase probably going to come back to like 250s because you're too close to this. You're too close to yesterday's highs. Or not yesterday, the day before highs. You're going to pull back into this area. Or you're just going to gap. So that's really dangerous. And it's, I don't like my, later in the week. Cipher. I'll look at your cipher. Do you do iren? These are more like day trading entries because you get your bounce in here. Yeah, so a lot of this stuff looks like, okay, the next dip, you wait. You wait to see the next dip. I don't know that these are ones that you want to press right now. You get a little red open tomorrow. Dude, okay, so I think this setup is like perfect for day trading. It's a red open tomorrow, go that gets bought up. That's the setup. So tomorrow red looks like the best buys for a potential. So tomorrow morning, to watch a lot of these early tomorrow morning. Yeah. If these get bought up tomorrow morning, that's going to be a better entry. Like this kind of stuff. And then you're into the 60s, which at that point you got to probably exit stage left. But bmnr, this one, wow, we're at $30 already. Oh, this is just okay. So bmnr though, this one has been nonstop all day, hasn't it? 16% almost. I know it looks so small on the screen too. At 30, this one's different. We still have an hour and a half left to close. I know it's 15%, 16% on the day. Maybe if you get these pullbacks now, before the close, since we have an hour and a half, okay, and you start to see it like it would be 29s, but I'm pretty sure on these this is going to go. But you crack this 30 and she's just going to rocket ship. This kind of setup off these kind of lows, a bmnr off these kind of lows is, this one is in a gap up kind of scenario. But it's 16% on the day. That's a lot of percent on the day. Ondos. Ticker tap. I'm going to put you in timeout for asking about Riot. Whoa, Ondos. What is this thing? Is whoa. This small cap stock. Yeah, I expect a little bit of traffic zone here. If you see that 765 hold, otherwise this is a squeezy name. You could squeeze in the 9s, possibly even see that 1060s. I'll look at it. I just don't know that there's a lot of interest on this one, but yeah, it's a similar setup. It's not my name though. It's a similar setup, but I'm not seeing the kind of extreme follow through. So there's a difference. I'm on a 30-minute chart. There's a difference. Extreme follow through on bmnr versus like a Riot. It's this, like if these things get through this instant level, they're probably going to have some trouble intraday trying to get through a wall of resistance like this, which is why I'm like, okay, you pull back, boom, pull back, boom, pull back, boom. But if it intraday, which is why after hours, if this kind of stuff happens, why you would have like a gap up after hours, if you have open all of a sudden, like if this happens after hours, then it doesn't need to bang its head intraday. And then all of a sudden you have a gap up after hours. Well, this is gone. And all these sellers open up in the morning off sides. This is how the squeeze happens. All of these sellers open up in the very next morning off sides. They instantly cover their shorts. They instantly buy back everything that they sold short, and whoop, that's how this happens, because they opened up off sides, and stocks actually make like 80+% of their moves after hours. And voila, that's the magic of the stock market. It's a little speculative here though. So does it happen tomorrow? I don't know. Meta. Okay, let's do Meta, and then let me call this. Yeah. Okay, so Meta made a big move. This gray box was my level, price of interest. It is out of the gray box today. We've been saying for a while that we want to see, all these little whatevers, that we wanted to see structure show up. This is a 30-minute chart still. Meta looks like a good spot to bounce. Now, is that bounce the bounce that turns this chart around? Again, I think it's too early. I think it's far too early to call any of that. The charts don't tell me that at all. Like, they don't tell me that is even kind of close. But I'm looking for this kind of scenario, and that is usually indicative. It's right here. And so today is an example of what a full day open and close looks like, completely outside of support. So this is good, which means that any pullback here is likely buyable. Now, Meta being Meta in typical Meta fashion provides no pullback when it decides to move. And the only pullback that was provided seems to be only visible on a seemingly 1-minute chart for all of, 2 minutes this morning before it decides to, so it was, 12 minutes this morning before it decides to skyrocket to the upside. And at this point, as long as it's over 611, which it's going to be, is going to 633. I'm going to say slightly below this. This one is going to go to 629, which is a little fair value here, which is an inefficiency that exists in the market from roughly here at this point to here. That could happen as early as tomorrow. Realistically. So you got another, I mean, from a trading perspective, definitely some more money. Do you press it here now? Probably not right now. But I definitely felt that this day trade was coming very soon. Unfortunately, my computer was not working this morning, so I had to relocate and missed this one. But this one, hopefully my crew caught it because, man, I was watching for this late last week. But this is it. 609 would be a solid pullback as long as anything in this area here that this just breached. See that? Any dip into this area, specifically 609, and holds, expect that to provide a bit of a launch pad for this to get into the 620, high 620s, low 630 level before hitting its head and having to go slightly sideways before making the next move. This is also going to align with the 20-day simple moving average. I do not have anything higher than that right now. At that point, this is just a simple trading range, but high statistical probability that it gets at least there. So appreciate you guys. You all rock. Yeah, it's always fun to hang out. Seems that my camera has stopped working. Look at this. Look at this emoji. You guys like this one? I don't know where that came from. I don't know if my camera overheated or what. It's possible. There, I'm back. I'm back. But cheers to you all. I had the heater on this place. It's really cold. It's getting winter soon, but hopefully it's not a crypto winter. I really don't think so. I hope not. But anyways, I'll see you guys on the next one. Probably tomorrow. I'll check in. Adios. Later.